You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, as of yesterday, the Nifty did manage to end in the green with modest gains above 23,300. But after having hit a new record high of 23,441 for the very first time. When we talk about the Nifty Bank, that also managed to snap the 2 days of losing streak on its weekly expiry day, but failed to climb above 50,000 mark or sustain above it on the closing levels as well. As we move into today, markets will react to a whole host of macro data, India and US inflation and cues from the US Fed as well. Remember, India's retail inflation has eased to a 12-month low of 4.7% in May, and the US consumer price index has fallen to 3.3% on a year-on-year basis in May again. And as expected lines, we have actually seen the US Federal Reserve leaving interest rates unchanged for the 7th consecutive time, but they have also noted modest progress towards their 2% inflation target. That was taken in positively by the US markets. We've also seen that the FOMC has now projected one rate cut this year. This is as compared to at the start of 2024 when they were looking at 3 rate cuts going forward. But despite this hawkish stance, we've actually seen record highs coming in on the Wall Street as well. Let's see how markets really react to that one. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. Today is Thursday. We have the second weekly expiry for the month of June, and Sakshi, all stars are aligned. So for the last 3 sessions, we've seen the Nifty consistently being unable to break beyond 23,400. I think now that the overhang that you mentioned from the US markets about US retail inflation and the FOMC Fed meeting is out of the way. More importantly, the US 10-year bond yield is very quiet. The dollar index is very quiet. You will keep on seeing these graphs one after the other. And more importantly, Sakshi, Gift Nifty is showing signs of life, up 77 points. So my understanding is that on weekly expiry day, you should see the Nifty close above 23,400. Let's see whether the bounce back or the gap up, as we call it in technical markets, remains in place. As Sakshi points out, a 58-point uptick, 23,322. But if you look at the Nifty chart, which will be right there in front of you, for the last 3 days, every time the Nifty has tried to go beyond 23,400, it's met with resistance from bears and they have pressed sales. Each time over the last 3 sessions, the Nifty has slipped more than 100 points from the intraday high as also the record level and slipped below 23,400 to close in positive territory. Now let's look at what is the structure of the show today as far as the markets are concerned. So most likely you'll see a break past 23,400 on the Nifty. Overseas cues are definitely very strong. Sakshi mentioned the strongest one, which is the US Federal Reserve saying that there could be a possibility of one rate cut in 2024, and the 2 that were supposed to happen in 2024, one of them is pushed to 2025, so you have an extra rate cut planned in 2025. Let's just keep that aside. So inflation data locally, which is in India, and inflation data overseas is helpful. That basically means that risk of trade is now back on the market. The risk is on as far as equities are concerned. Gold is quiet, crude is quiet, bond yield is quiet. It means good times for equities, at least for today. Now, what should Indian traders be doing as far as the Nifty is concerned, ladies and gentlemen? Our focus and attention remains the budget, which is on the first week or 8th or 10th, by 8th of July. There is consensus across the market that the agri theme will play out well. Therefore, fertilizers, chemicals, paper, sugar, anything related to agri-chemicals should be in demand. So dip should be purchased for that. And of course, anything that you see on the Nifty that moves towards 23,250, 23,300 during the day is to be purchased. More importantly, if the Nifty is above 23,450, which means a record high for more than 50 minutes, then Sakshi, we will be chasing momentum on the long side. Remember, last 3 days it has been the days for mid caps, small caps, then NSE 500, and of course the PSU pack. I think it is the day of the Nifty and the Bank Nifty. One word of caution I'd like to put in: Monday is a holiday for the markets, therefore options premia will be squeezed. Remember, Bank Nifty starts a fresh weekly expiry today, therefore it will have one less day of trading of Monday. Options premia will be squeezed. Traders are forewarned, keep that in mind. As also for the Bank Nifty, HDFC Bank will remain the key thread to look forward to, as also the levels of 49,900, 49,800 and 49,700. They provide very strong support to Bank Nifty bulls. On the upside, 50,200 needs to be taken out. It remains to be seen whether it will be a combination of HDFC Bank or SBI, or the two other private sector banks, ICICI and Axis, will also contribute. Mid-cap banks, Sakshi, like Federal Bank, are already at record highs. It's the time for the big bulls to start clicking. In terms of individual stocks, yesterday was the annual general meeting of Trent. Let's see the stock right there in front of you. Needless to say, Trent is at a record high, but what is critical, Sakshi, is the expansion plan. 30 new West Side stores will be opened for ladies, and 200 new Zudio stores. So that's a very big plus. There is more steam left in Trent. Let us see how it reacts. Two more stocks. Sobha Developers, a 20% discount on rights that has been announced. It will be open in the fag end of June. Remember, Sobha has been one of the outstanding performers in this rally that we've seen in 2024. And finally, Sakshi, another block deal, another stake sale by a promoter, and this time a partial sale by Bain Capital in L&T Housing Finance. This is an 8.8 crore share transaction, netting somewhere like 1800 crores for Bain and a couple of other sellers. This is at a 1% discount, and it will happen in the block window. Now tell us what's happening in S&P 500 and what's happening in the Nasdaq.
One rate cut in the offing news was enough to spur the Nifty, the Nasdaq and the S&P 500 to record highs. Both of them made new highs overnight. In fact, we did see that the S&P 500 closed above the mark of 5,400 for the very first time. So the US markets really cheered what came in from the US Fed as well. And, we've seen all across the board, S&P 500, Nasdaq and Dow eking out gains in the overnight trading session. Dow Jones, in fact, just closed mildly in the red, about 0.09 odd percent, but 1.5% improvement for Nasdaq, and S&P 500 up by 0.8%. Like you pointed out, Brent crude trading about just 0.2% lower, so it's quiet, $82.4 a barrel. Gold declined by 0.4% to $23.15 an ounce. We'll keep an eye out on that. Following the US markets data, markets in the Asia Pacific also rose in the early morning trading session today. The US Federal Reserve's unchanged rates for the seventh time have been taken in positively, and also as inflation data has come in softer than expected. So across the board, we've actually seen that the Asian markets have reacted positively. Let's look at how the Nikkei, Kospi, and the Hang Seng and Shanghai have been moving in trade. So you will be able to see gains across Nikkei, Kospi and Hang Seng. With Kospi about 1.5% higher in trade. That's the strongest index in the early morning trade. Shanghai is just softer by about 0.1%. Gift Nifty futures, on the other hand, are indicating a gap up start, quoting at 100 points higher than Nifty futures at about 23,460 odd levels as well. Now, when we talk about the kind of opening that we can expect, of course, a significant gap up opening is what we expect, and record highs amid this optimism in global as well as domestic cues as well. As far as the flows are concerned, remember the overseas investors in the Indian equities have turned net buyers after a day, and foreign investors poured in money worth about 427 odd crore rupees, while domestic institutional investors stayed buyers for the third day. They mopped up equities worth about just 234 odd crore rupees. So there is some kind of a caution that the FIIs with which they are approaching the Indian markets at this point in time. Whole host of stocks that we need to keep an eye out on. Some of them are already highlighted by Shail. So L&T Finance, extremely important to watch out for. Private equity major Bain Capital, through its affiliates, are likely to exit L&T Finance Holdings by divesting the stake of 3.5% at a floor price of 169.17 rupees per share. This represents about 88.2 million shares and it's a part of the cleanup trade. Yesterday, the stock was up 3.5%. Sobha, again, the realty firm, has said it's planning to raise about 2,000 odd crore rupees through a rights issue of shares. The company intends to issue 1.2 crore rights issue shares, each on the partly paid basis. And assumption of full subscription and payment of call monies will also result in the company fetching about 2,000 odd crore rupees. Tata Power is going to be important. Remember, the company strengthens its nationwide e-bus charging network with high capacity and fast charging points, and therefore we'll keep an eye out on this one. Nestle's board has approved the continuation of royalty payments at the current rate of 4.5% to the parent company. So there will not be as much of a nervousness on that front. The stock may react positively. Gensol Engineering, the company has received a Gujarat Urja Vikas Nigam Limited 250 megawatt battery energy storage project worth 1340 odd crore rupees to supply electricity and on-demand basis to Gujarat state's discoms during the peak on and off hours as well. So Whirlpool is going to be important to watch out for. The company has signed 3-year joint marketing pact with HUL. So both these stocks will keep an eye out on for product marketing and advertorials as well. Exide, remember yesterday we were looking at the stock. The company has now invested 75 crores by subscribing to the rights issue of subsidiary Exide Energy Solutions. The total investment now stands at 2452 odd crore rupees. So those are some of the stocks that I'm watching out for, Shail.
Sakshi, one more point I'd just like to mention in the FI number that you put out on screen. Remember, FIs are short since pre-budget, but the long short position is now getting better for Indian markets.
Yes.
You mentioned the positivity that is there in cash markets, but somewhat similar trends are also seen as far as index options are concerned. So now the net short is reduced to just 80,000 net contracts. Remember, this was 2.2 lakh contracts in the beginning of this week and a whopping 3,20,000 contracts when the voting day, pre-voting day and exit poll day. So there has been a substantial fall from that level to what is now, and this is also aiding sentiment as far as prices are concerned on the Nifty and the Bank Nifty. So with that background in mind, ladies and gentlemen, we are also awaiting the arrival of Mr. Amar Singh, Senior Vice President for Research at Angel One, and a little later Mr. Rajesh Palvia, Head of Technical and Derivatives Research at Axis Securities, will be joining us. Meanwhile, as Sakshi points out, you've seen a nice uptick in Asian markets. Like I mentioned, the entire world was waiting for the US Federal Reserve to come up with its statement and progress on interest rates. Now that is over, therefore equities are back in fashion. One word of caution on domestic inflation for the month of May. It may have slipped to 4.75% from 4.8% earlier, but what is critical is Sakshi food inflation. It should cool down from what it is now. I think it's 8.5%, down from 8.69% because monsoon is on its way. But for the 5th month in a row, above 8.5, and for the 7th month in a row, above 8. So food inflation, things that affect our kitchen, sabzi, dal, आटा, चावल, चीनी, इन सब में 8% की वृद्धि है. Sakshi.
Okay, let's welcome our guest on board. Amar Singh, Senior Vice President Research, Angel One, is now with us on the edition. Amar, warm good morning to you and thank you so much for taking the time out. How are you really looking at the overseas cues now coming in from the US Fed, the macro data, both US and India inflation, and what do they now indicate for Indian markets? Is the biggest overhang now done and dusted, and will we now see a one-way without concerns upward right on the Nifty?
Yeah, very good morning and thank you for having me on the show. So I would say markets to a certain extent had or have factored in that there's going to be, earlier they were more optimistic that there would be 2 rate cuts, but now it appears that maybe there's going to be only 1 rate cut. And also inflationary concerns have been there on the top of the mind, because in the US also the target rate is 2%, and currently it's significantly higher from there. So that concern is also there. Also the US, if you look at the jobs data which had recently come out for the previous month, that also was strong. So overall, these have been factored in the markets. Now coming to our domestic markets, definitely a strength in the US markets provides a strength not only to our markets but global markets as well, because it's all these funds which are active in most of the countries. One. Secondly, coming to our markets, inflation definitely is a concern. Monsoon definitely is important. It can be a showstopper also, but so far so good. And also there is a possibility that we could witness some rate cut, and maybe we might be ahead of the curve in terms of the US Fed. So these are certain aspects which are definitely positive for the markets. If you look at some of the major heavyweights, some of the major sectors like the banking space, which has a significant weightage in the Nifty, or you look at some heavyweights like Reliance, IT also seems to be more or less bottoming out of the heavyweights. So these bode well for the markets, and also the broader markets to a certain extent is positive. But I would definitely like to add here is that it doesn't mean that you go out and buy any stock that you want. You have to definitely be cautious, because many of the stocks are trading at record highs. Many of them do not justify the valuations which they are trading in terms of the PE, in terms of 40p, 50p, looking at the forward earnings. So these are certain things. But yes, on any correction, on any decent correction, that's a buying opportunity. But having patience and discipline, and in an SIP mode, that's going to be the way forward. But yes, the overall trend is up, and what we did witness last week due to election exit poll and election results, that is definitely behind us. So now on the downside, 21,000, 21,700, 800, that's a very strong support zone. On the upside, anywhere between 23,600, 700, that's a zone of resistance. But the biasness is in favor of the bulls, but with some fair degree of caution.
Namaste Amarji, a very warm welcome to you on Market Today. You know, that's the reason why we have you on the show, to make it easy for our viewers to get the distilled wisdom at Angel One, and of course from your experience. Now tell us, with all the checks and balances that you have just verbalized, what are the two stocks that are worth investing at current levels?
So one stock I would say is from the infrastructure space, that is cement space, because we've seen some cement stocks really witnessing significant rally. And Ramco Cement is one stock one can look at. Currently, it's around very crucial resistance zone. So I wouldn't say one should enter at the current level. So 890, 900, that's a very strong zone of resistance. So from a short-term perspective, sustaining above that level, then the stock has a potential to rally anywhere between 5 to 10% from a short-term perspective. So that's more on the momentum play. So that's one stock one can definitely look at. And the other stock which I like from a long-term perspective is State Bank of India. So what we are seeing here is that the stock is consolidating around the current level. So if you look at somewhere around 840 or so, so it's more or less in a trading range. On the upside 900, on the downside 700, 720. So any pullback in the stock is a very good opportunity for buying. But one needs to remember that it's more from a trading perspective, because the upside seems to be capped, but the risk-reward ratio would be more favorable on any correction. So these are two stocks one can look at.
Okay, Sakshi, just a point of note, as far as the mid-cap cement sector is concerned, it will be in excellent shape today. There is news coming in that the Adani Group has kept a war chest of $3 billion to buy out mid-cap cement players. These are just names that have been suggested: Penna Cement, Swarashtra Cement, the remaining cement business of JP Associates, and of course the cement unit of ABG Shipyard. So Ramco Cement, very well taken, sir. We'll keep this in mind, but as also we'll keep ACC and Ambuja, the flagships of the Adani cement business, in mind today. Sakshi.
Absolutely. Well, apart from that, a whole host of other stocks that are in news. So let me just quickly ask you, So one, there are two reports that I wanted to take your view on. One is CLSA's report on the power space and the other is CLSA's report on the consumer space. Both are these spaces that have been gaining traction over the last few days as well. Now CLSA believes that on the power space it's already set many records in May 2024. With massive power demand at the growth of 15% year on year. They believe that regulated utilities, NTPC, NHPC, CEC, CESC will be in the key, top demand and will be favored going forward from here. How are you really looking at the entire power space and where exactly are you putting in fresh money? Is it with the utilities? Is it with the distributors, transformers, or are you looking at even the financiers at this point in time after we've actually seen the recent run up? And the second one will be on consumption, which I'll come to a little later, sir.
We have to understand that India, we are a power, I would say still a power starved nation. We have a long way to go, and in terms of the power consumption, we'll see multifold. So that bodes well for the infrastructure companies, for all the companies who are into this ecosystem, be it the power finance companies, be it the distribution companies, be it the power generation companies. But here the question is that because this is also just like if you look at the aviation sector, again, crude oil energy plays a very important role because the pricing of the energy fluctuations has a significant impact on the bottom lines of these companies, aviation companies. Likewise, in the power sector, I would say if you're looking at coal, thermal, or so that also still plays a very important role till the time we don't move significantly to renewables. And there also the cost of power generation is coming down. So ultimately, it all boils down to the input cost and how the companies are able to manage their debt, because many of these companies have a significant debt book. So if they are able to manage it consistently, because there's no doubt that there's going to be demand, and the way we've seen the summer currently progressing and going forward also with regards to climate change, not only in India but across the world. So that means that there's going to be more power consumption, and also what we are witnessing is the purchasing capacity of the average Indian is increasing. So earlier, what AC air conditioning was considered a luxury, now it's becoming more of a necessity to a very great extent. So this all means that there's going to be more power consumption going forward, bodes well for these companies. So I would say that looking at some of the companies like Tata Power or NHPC, as you said, or for Power Grid for that matter, or PFC, these are stocks one can definitely look at. But I would say in a diversified portfolio, don't get into 4 or 5 stocks of the same sector, maybe 2 stocks you can pick. But at the same time, you have to look at it from a long-term perspective. Because as you rightly said, many of the stocks are trading at significant highs, at record highs. So if you buy means lock, stock and barrel, that means you go all out and buy at the current levels. That wouldn't be a good idea. But having an SIP mode definitely is advisable. And this is one sector which has got a lot of potential. But again, I would like to add a caveat here that how the companies manage their finances, that's going to play a very crucial role, which will separate the winners and the losers going forward.
Okay, understood. Now let's also talk about the consumption space, which again was in the focus right ahead right after the elections, because it was being talked about how the government will now be focusing on rural recovery and on welfare schemes. CLSA believes that to play the rural boost, perhaps the best way is via food and beverages. They have upgraded Nestle and they have maintained a buy rating on both Varun Beverages and outperform rating on ITC and Britannia. How are you looking at the consumption space? Is there anything else that should be added to the list?
So if I look at the consumption space, these depend a lot on the rural sector and I would say the earning capacity or the buying power of the rural sector, how that gets impacted. So these are stocks. You have to understand that these are stocks which ideally they are blue chip stocks. If you talk about Nestle, if you talk about Britannia, if you talk about Hindustan Unilever, talk about ITC, these are stocks which have been there for decades and they are going to be there for decades based on the business model which they have, provided they don't, there isn't something of a disruption which no one has imagined as of date. So having said that, these are stocks one can definitely look at buying amongst this. What we are seeing currently is that there's no trend per se, meaning what? That more or less we are seeing some sort of consolidation in ITC post the sharp rally. We are seeing some sort of consolidation. HUL, we are seeing a base being formed. Nestle, Britannia, again, we are seeing some sort of consolidation. So these are stocks which will give you, I would say, slow and steady returns over a long period of time. They definitely should be part of one's portfolio, no doubt about it. Having one or two stocks from this segment is a good idea. But again, as I said, a lot is going to depend on the next 5 years as to how the rural consumption really picks up, because that's a concern not only for the government but for the central government, for the state governments as well, because that's where a major population still is deployed and stays. So that's one. But these are stocks which are, I would say, more defensive in nature. But these are some of the stocks are definitely good to have.
Okay, Amarji, we have just a minute left before pre-open takes us over. Would you mention one good fertilizer stock and one good sugar stock based on your internal research that our viewers can hold on to, even from current levels?
So I would say National Fertilizers (NFL) is one stock one can definitely look at because this is one stock has pulled back, and I would say this is one stock one can witness significant rally, but on the upside seems to be capped around 130 odd levels, but it's in an uptrend, so this is one stock one can look at. And the other stock which you mentioned was from which space? Sugar, if I'm not wrong.
Sugar.
Yeah. So amongst the sugar, I would say this is one stock one can look at. Banari Aman, that's one stock one can look at. It has pulled back. It has a potential to rally, but a major rally would be above 2,700, 2,800 levels. Then it could witness a 10 to 15% rally if it sustains about 2,800.
Okay, ladies and gentlemen, we'll now look at the markets. Against all expectations, you have a red tick. Welcome to volatility. I'm sure this will improve for the better. But for the moment, 23,300 for you as far as Nifty is concerned. Let's dig a little deeper. Let's look at what the market is trying to indicate. Okay, let's look at the green numbers first. LNT, 1.8% higher, 36.97. Let's look at Kotak Bank. For some strange reason, it's up 3%, and this is really good, 1760. Tata Motors is up 1.6%, 1005. Now let's pay attention to the three big boys. Reliance, 26 rupees lower, 2900. HDFC Bank, 29 rupees lower, 1545. Infosys, 35 rupees lower, 1450. Unlikely these prices will be there, ladies and gentlemen. They'll improve dramatically for the better. Now let's for the moment pay attention to what the other sectors are telling us. 8% up, 2% uptick on Exide Industries, 580. It's fluctuating very widely. I'll just avoid that for a while. Let's look at the top gainers as far as the index is concerned. Okay, Whirlpool has tied up with Hindustan Unilever in a 3-year pact, 3% higher at 1845. 361 Wealth has purchased a website from the Times Group for 366 crore rupees. It's a stock cum cash swap, 4% higher. You have a very strong gain coming into Shobha Limited. Remember, this is news-led. Equity dilution, rights issue in the offing, 2.7% higher, 2118. From Wednesday's closing price, the rights is priced 20% lower. The Nifty is now back in the green, 16 rupees higher, 23,342. A very quick detour into FNO stocks. Let's see what are the ones that are clicking. L&T Finance, interesting. 2.7% higher, 175. Bain Capital and its associates to sell 8.8 crore rupees shares at current price in the block deal window. Back in the green is M&M, 2886, 3.5% higher. Nestle, again news driven, 2.4% higher, 2598. The Nifty, ladies and gentlemen, is gathering steam, 23,394, 96 points higher. Okay, now we are back in the green. 23,420. This is very, very interesting. Let's see what's driving this up. Remember the three index heavyweights that I talked about and mentioned that those prices will not continue. They are moving towards the green. Okay. HDFC Bank is still down 14, 1599, 1559. Reliance back in the green, and how? 39 rupees higher, 2965. This is the lone stock which will take Nifty up. Sakshi, a green tick on ITC, 5 rupees higher, 437.55. This is looking super good. I believe Rajesh Palvia ji is with us. No, he'll be joining very shortly. Amar ji, a very quick view on how M&M is behaving. One of the best performing stocks on the market. Your view at current levels?
I would say this is one stock which has been in an upward trajectory. And looking at the way the structure of the stock continues to remain strong and positive, but a fresh entry at the current levels I wouldn't recommend, but that there is no trend change indication as well. So effectively it means that those who are long, they should stay long. There's no reason to get out of the market. And if we look at some crucial support zones, so that comes around 24,2,500. That's a crucial zone of support. But overall, the trend still remains strong and positive for M&M. So those long, they should hold. A fresh entry at the current levels, I would recommend.
Okay.
Sakshi, you have 23,500 on the Nifty in pre-open. Let's see whether this continues or not, but a very nice strong gap up. My only hope is that the gap up is sustained and we close above 23,450. Sakshi, what are you watching?
A whole host of stocks. Gensol Engineering, remember the company had got a project worth 1340 crore rupees as L1 bidder. So the stock has reacted positively, 5% higher in trade. Tata Power, let's look at that one. Again, the company is enabling e-mobility across 30 bus depots for state transport corporations. So increasing its presence within the EV and charging space, 1.8% higher. Dr. Reddy's is important, 1.5% up in trade after, the company has got an approval and to the license agreement has been approved with Ingenious Pharmaceuticals. So that's up by 1.5%. Sobha, let's talk about. I think again we have been discussing the rights issue up to 2,000 odd crore rupees at 1651. So that one is reacting. Sobha Limited. We'll keep an eye out on that one too. So that's up by 2.3%. Glenmark has got a US FDA approval for generic medicine to treat heartburn. Again, that stock is also reacting. Let's talk about Glenmark Pharma. Let's pull that stock higher as well. So yes, it's just a mild positive that we can see on that one as well. Let's also look at some of the other stocks. So IFL Finance I want to look at here. Jefferies has come out with a report. Remember that the RBI special audit concluded sooner than expected and they're now awaiting the RBI's response. But therefore they are holding on to the target of 465 on IFL Finance for Jefferies. Let's look at how IFL Finance is also reacting to this one. I'm keeping an eye out on this too. Apart from this, a whole host of other stocks. So Morgan Stanley, remember, had maintained an overweight, so 1.5% higher for IFL Finance on that report. Let's also pull up two stocks, Infosys and Trent, that Shell had highlighted earlier. Both of these are on brokerage houses radar. Morgan Stanley gave an overweight rating on the company with a target price of 1650. And also on Trent, there was a positive news and of course an upgrade from Morgan Stanley on Trent as well after that news report has come in of expansion, 3.2% higher at 5190. So those are the key stocks that I'm looking at, Shell.
Okay, ladies and gentlemen, like I said, we'll be waiting for Mr. Palvia to join us and he is with us. Namaste Rajesh ji, a very warm welcome to you on Market Today. We are welcoming you with a nice gap up, 160 points on the Nifty. Anything and everything that looks in the green is also looking good fundamentally as also on the charts. You tell us your two favorite stocks for today.
Good morning, Shailji. Good morning, Sakshi. Good morning, everyone. Yeah, so it's a gap up. Though we have seen some consolidation and then again, gap up is likely to be there and then we may have a follow-up buying action after this good gap up. As most of the call writers are placed at 23,400, 500 strike, and if at all we able to penetrate this range, then there is a high possibility that, short covering action we can see in the Nifty and then really can extend further. For Bank Nifty, 50,200 is the immediate resistance area based on the call concentration. If we able to take out this level, then again here also we can witness some short covering action. On the stocks front, at this moment we are initiating here buy on LIC Housing Finance. In the previous day, we have seen very strong buying action. Stock managed to give breakout of a flag formation on a weekly chart. So looking at the breakout on the weekly chart. Long built up was there in the derivative data. So we expect LIC Housing Finance can continue further more upside. 740, 750 could be the next target. Keep your stop losses around 705. The second stock is again from the banking and financial, that is Federal Bank. Stock is moving in up-sloping channel on daily, weekly, monthly time frame. So that clearly shows that sustained buying action is taking place in this stock. In the previous day, long built up was there. The way stock is now holding above 170 mark, we believe that if it's hold 170, then possible rally can extend to 178 to 184. So Federal Bank is buy with stop loss of 170. And the third stock is from the cement space, and then here we are recommending here Ambuja Cement. Most of the cement stocks have shown a rally in a previous day. The way a stock managed to give breakout on the near-term chart, we expect that Ambuja Cement can continue further more upside. 690 to 700 could be the next target for Ambuja Cement. Keep your stop losses around 655.
Okay. Sakshi, this is a perfect sign of a bull market. You look for two stocks and friends give you three. So Ambuja, Federal Bank, and of course LIC Housing Finance is what we are looking at as far as Rajesh is concerned. And again, I'll repeat the news on Ambuja. Media reports suggesting that a $3 billion war chest has been readied by the Adani Group, the owner of Ambuja, as also ACC, to dethrone the current market leader Ultratech Cement from its pole position as far as cement capacity is concerned. So Ambuja and ACC are looking to buy out mid-cap players. Remember, this is what is a media report, such as Penna Cement, Swarashtra Cement, the cement business of JP Associates, and of course the cement unit of erstwhile ABG Shipyard. Keep that in mind. Also keep in mind Ultratech Cement. One very quick look at how PSU stocks have opened, and then we'll see what Sakshi is up to. Sakshi, Dredging Corp, 1.75% higher. Remember, for the last 2 days there has been a 10% circuit. Let's see what happens now. Okay, how about defense? Defense will be clicking in the green. Very good charts. You have Zen Technologies, 1.4% higher, 1048. BEML, 1.5% higher. The other stocks, Cochin, Midhani, BDL, are up between 0.2 and 0.5%. One very quick look at sugar, the current favorite. Okay, Dhampur is 7.5% higher, 254.79. Uttam Sugars 4.5% higher. Rana Sugars 2% higher, 25. Sakshi, what are you looking at?
A whole host of other stocks that are moving positively. So Nestle is definitely the top mover today, 2.2% higher. But Ultratech Cement, despite that watch is being announced, is still higher by about 1.9% in the pre-opening trade as far as we can see. M&M is up by about 2%. So finally coming back. Tata Motors continues with its yesterday's run, 1.3% higher in trade. Power majors, of course, NTPC, Coal India, they're also up and about over 1% each in trade. PSU stocks, we're also looking at NMDC now up by 1.6%, HAL, BEL, they're back in action again in trade today. Let's also look at some of the railway pack stocks. So IRCTC, for example, that's also inching higher by about 1% in the early trading action. Realty seems to be in action again back today, of course led by Sobha Limited, that will be driving the moves, and apart from that, auto space seems to be in focus, 1% higher in trade. Not just that, even the Nifty Next 50 stocks are also into the green. Trent may be opening 3% higher. Varun Beverages, remember there is brokerage house report positively indicating further buys on this one, 2.6% higher. Zomato is in favor. Again, there are brokerage houses reports, 2.3% up for this one. Tata Power, 1.6% higher. And then you have some of the other stocks from the insurance basket as well. So ICICI Pru is holding up, SBI Life is holding up. Geo Financial Services is back in action. After a long haul, we are touching base upon this stock to about 1% higher in trade. So that's the kind of setup that I'm looking at. 2.5 minutes remaining for the markets to really open up. Let me get in Rajesh ji on a few of stocks. that he can give us his view on. राजेश जी, पहले तो नेस्ले पर आप क्या करेंगे आज ये बता दीजिए, और दूसरा सीमेंट स्पेस में आपका कौन सा पसंदीदा स्टॉक होगा?
तो देखिए नेस्ले में जिस तरीके से अब यहाँ पे एक अपवर्ड मोमेंटम देखने को मिल रहा है, ऑलमोस्ट इंडिकेटिव टिक दिखा रहे हैं कि ऑलमोस्ट 2.5% वी आर सीइंग अपटिक इन नेस्ले. So possible really can extend as now stock is trading above 2550 level. So if it's hold 2550, possible really can extend. And then we can see a target towards 2650, 2700 also. So at this moment, 2500, 2520 needs to keep as a stop loss to hold the long position. From cement space, yes, most of the stocks have done well in the previous day. Buja Cement is our preferred pick, but again, if I look at other cement stock, so I think Ultratech is also looking promising. Stock is almost trading its all-time high trajectory, and the way stock again, managed to break out of its previous swing high. So this stock can also have a potential to continue its upward momentum. 11,500 could be the possible target for Ultratech Cement in next couple of week kind of time frame. So Ultratech Cement is buy with stop loss of 10,920.
Okay. Sakshi, one interesting thing I learned in the markets was always buy the company that is to be acquired and sell the acquirer, which is buy mid-cap stocks which are targets of acquisitions in any space, and probably be very careful with the large cap ones. Nevertheless, we are waiting for markets to open. Remember, it's the weekly expiry of the Nifty, and we are going to have a very, very good day. The Nifty starts with a century, 105 higher, 23,426. The Nifty Bank starts a fresh expiry today, 181 points higher. 50,000 is with us, Sakshi, and the IT index is 250 points higher at 34,812. A green tick on NSE 500 also. Let's look at what's contributing to this lovely rally that we have seen. Okay, first look, all 9 out of 10 index heavyweights are in the green. We'll start with Reliance, 9 rupees 35 higher, 29.33. HDFC Bank 6.8 higher, 15.81. Infosys 14 rupees higher, almost 1500 for you. Which is the top gainer in the index heavyweights? It's again Infosys, 1% higher. Tata Motors consolidating in the green around 1000 levels. TCS about 0.8% higher, 38.62. What's losing ground? Hindustan Unilever, nothing to be worried about. Okay, top gainers NSE 500, news driven. Rights issue in Soba Developers, 20% discount to yesterday's closing price. Counters up 3.7%, 21.38. L&T Housing Finance, ladies and gentlemen, the deal is done, and that was the 8 crore shares that was supposed to be sold. The transaction is yet to happen. 2.9% higher, 175.60. Remember, there was a massive short covering in L&T Housing Finance yesterday. Archean Chemicals, this is an upgrade by Batliwala and Karani, 3.2% higher, 643. What is clicking in the green as far as all-time highs are concerned? Real estate, Lodha Developers, 3.4% higher. Railways, Jupiter Wagons, 717, 3% higher. Power sector, JSW Energy, 664, 2.6% higher. Ambuja Cements, 1% higher, 674. A very quick look into the PSU basket. What's in the green? MTNL 1.5% higher, 43.45. Can Bank 1.6% higher, 124.76. Nothing much to talk about. Defense, let's look at defense. Okay, nothing much here. Astra Micro 2.5% higher, 909. Advanced decline as far as markets are concerned. It's a very nice stable 1800 shares in the green versus 213 in the red. The top gaining index, ladies and gentlemen, is Nifty Realty, 1.8% higher, and in the red is the FMCG index. 18 out of 19 indices are in the green. With this background in mind, Rajesh ji, coming to you, would you chase the Nifty, or does anything else catch your attention?
At this moment, I'll wait because we are now almost trading near to the major call concentration area. So I think for 10-15 minutes we will wait. If we get any dip towards 23,400, then that's the level to again re-enter in the Nifty. So we'll wait for another 30, 50, 30, 35 point dip, and then we can buy Nifty because today is option expiry day. So still Nifty will try to get some support buying action at around 23,400, 23,380 kind of zone. So we will wait in the Nifty. But yes, on the stocks front, I think a lot of many stocks are showing good traction. I think the pharma is another sector where we are seeing that buying is happening. A lot of mid cap pharma is also showing traction, and large cap pharma is also looking attractive. So I think from pharma space, one can buy here Divi's Lab. The way stock managed to give breakout, and the after this opening, stock is showing good buying interest. So Divi's Lab can exhibit good amount of rally towards 4,600 to 4,640 kind of level. So Divi's Lab can be a buy with stop loss of 4,540. And another pharma space, pharma stock, that is Natco Pharma, is also looking promising. Stock already given a breakout in previous day, and stock is holding the ground at higher level. So we believe that Natco Pharma can exhibit good amount of rally towards 1230, 1240 kind of zone. So that stock can be looked at to buy with stop loss of 1155.
Okay, got that. Pharma space, we'll continue to keep an eye out on. The other spaces that are in focus, it's the life insurance companies. HDFC Life now over 2% higher. You also have SBI Life inching up, ICICI Prudential, Max Financial, Max Life, they're all up in trade. You also have LIC that's up in trade as well, about 0.5%. The entire basket of stocks seem to be in focus. Let's get Amarji into the conversation. Amarji, what are you sensing within the entire insurance basket? Is this a investment that one should be looking at?
I would say if you look at the insurance basket, definitely, because the way we are seeing LIC for that matter moving up, because we've been bullish in LIC for quite some time after the stock had corrected significantly. So it's more than double from the current levels, and also the momentum is there to stay. So LIC is one stock one can definitely look at from the insurance space. And if you look at other stocks in the insurance space, so there also we are seeing some very good traction. So for example, HDFC Life. If I look at HDFC Life, so HDFC Life is also moving up, but there's a very important level for HDFC to watch out for, and that's somewhere around 600 odd levels. So sustaining above 600 would mean that the stock could rally significantly, because the stock could rally towards 650 levels. That would be the first level of zone of resistance. But yes, for most of these stocks, it appears that they formed a bottom, and there is a momentum that is building up.
Rajesh, I want to understand real estate momentum with you. The entire space is in focus. Sobha up 5%. There is News Trigger. Macrotech developers up by 4.5% as well. Prestige Estates is inching higher too. The entire basket of stocks is moving up again. Where would you keep your focus within realty?
So definitely, Shobha and Lodha developer, both stocks are looking very attractive at this moment. The way Shobha is trading at all-time high trajectory, buy on dip should be your strategy in this stock. Across all time frame, stock is showing strength. So I think this stock can continue further more upside. Though stock has already moved up 4.5%. So if you get any opportunity towards 2100 kind of zone, then it's again good level to re-enter in this stock. Possible rally can extend in the coming trading session towards 2250 to 2300 for Shobha. Loda Macrotech developer is also looking promising. The way stock is holding the ground at on the weekly as well as on the monthly chart, we believe that if it continues to hold above 1470 1460 zone, then here also we can see a good rally towards 1650 kind of zone. So Macrotech developer is also buy with stop loss of 1470.
Okay, ladies and gentlemen, we have at 9:22 the first 7-8 minutes of trade. And Sakshi, let's look at volume buzzers because there are already many. We'll focus on L&T Finance. Now 4% higher. already about 140% of 5-day average is done. The price is 177 and this is a monthly high. There is a breakout happening in IEX, 1.8% higher, 176.87, and of course you have a very nice uptick in Renuka Sugars. Remember, this is India's largest sugar MNC. People don't realize that because the name is as such, but 4% higher, 45.88. Let's come to Rajesh ji. Rajesh ji, any choice between L&T Finance and Sri Renuka?
So both belongs to different sector. So if I go with the technical structure, L&T Finance would be my preferred choice, as stock has shown a gap up opening, and stock managed to give breakout above its April 2024 swing high. So I think here is the clear breakout, and I think this stock can continue furthermore upside. 185 could be the next target for L&T Finance. So here one can hold their long position, or even can initiate new long position with stop loss of 174. As you pointed out for the sugar stock, yes, we do have bullish view for sugar space at this juncture. In the last couple of days, we have seen good buying interest in most of the sugar space. Renuka is also showing a strength. Now stock is approaching towards its previous swing high level, which is placed at around 47-48 zone. So that needs to watch closely. If stock manages to give breakout of 48 level, then there could be a fresh round of buying we can see in this stock, and then possible rally can extend to 56 kind of target on the higher side. So those who have already bought the stock at lower level, I think they can hold their position, as sector is showing good buying interest. So I think there could be some more buying interest in this sector, because generally we have seen whenever sugar space start showing good buying interest, that continues for couple of weeks. So here is a potential to move further higher towards 56. Keep your stop loss at this moment around 43. And Shailji, one more stock from this sugar space that is a proxy play to sugar, that is Praj Industry. Very strong breakout on the daily, weekly time frame. If you look at the overall structure for the stock, now we feel that as stock is almost reached to its all-time high trajectory, here we can see a rally towards 700, 720. So this stock is also looking promising. As a disclaimer, this stock we have already recommended to our client day before yesterday, and we are having a target towards 680 to 700 for the Praj Industry.
Okay, ladies and gentlemen, we track 22 sugar stocks. All 22 are in the green, and of course 2 sugar ancillaries, which is Praj Industries and ISJEC. ISJEC is in the red, minor 0.2% lower. Nothing to be worried about. But what is taking it away, Sakshi, is L&T Finance, 177.80, 4% higher. A very quick view, Rajesh ji, on L&T Finance from you. This is news driven, but let's check it.
Yeah, I think Shailji, one can hold 185, 186 could be the next target for L&T Housing Finance. The way stock has managed to give breakout, I think one can ride this rally with stop loss of 174. Very strong buying action is taking place in most of the NBFC space, especially in housing finance companies. So I think L&T Finance is looking very promising, and one can hold this stock for target of 184, 185 kind of.
Okay, got that. Let's also look at some other spaces then. I think it's the IT space that is now taking it away. Amar, let's bring your focus and attention onto the IT space. LTI Mindtree up 2%, 1.5% uptick for Tech Mahindra, Wipro, Coforge, HCL Tech, Infosys, Emphasis. They're all up and about in trade. How are you looking at this fresh momentum in the IT space, and is there, a specific stock that you are betting big on right now?
So looking at the IT space, what we are seeing is that there definitely is a pullback. But if I first talk about HCL Tech, so HCL Tech is running into very strong resistance around the 1470, 1480 level. So till the time it doesn't reach that level, I would say it would continue to remain I would say, or slightly on the bearish side. If I look at some other stocks like TCS, for that matter. So if I look at TCS again, we are seeing that there is some sort of interest coming back in the IT space and the IT stocks, but it would be, I would say, too premature to say that the trend has changed. So we would say that it could be some sort of consolidation post the rally which we are witnessing in the IT stocks.
Okay, got that. So that's the view coming in on the IT stocks as well. Rajesh ji, technically speaking, is IT also interesting, looking interesting to you? And which stocks look positive on the charts?
So Sakshi, I believe that some of the mid-cap IT stocks are showing buying interest, and where one can keep focus for trading perspective. LTTS is looking promising. Stock is now trading about to its 200-day moving average, as well as stock now penetrating to its 50-day moving average also. So looking at the structure for LTTS, I think there is a potential for further more upside towards 5,050 to 5,100 kind of zone. So here one can look to buy with stop loss of 48.90. Another stock that we like is Emphasis. Though there was a block deal in last couple of days, but still the way stock has recovered from its recent low, we believe that here we can see a good rally as the stock is holding about 2,400. So we can say stock is now recovering, and if it's a hold about 2,400, then rally can extend to 2,520 to 2,600 also for Emphasis. So here also one can look to buy from the IT space.
Okay, ladies and gentlemen, we are now at 9:30. The first 15 minutes have lapsed, and that essentially means that you have the high and low of the Nifty for the first 15 minutes, which at the moment, ladies and gentlemen, is testing the first support level of 23,411. So the high is 23,481 and the low is 23,409, which is exactly the first support level. Rajesh ji, coming to you, now that at least the first 15 minutes are clear, let's look at the next weekly expiry, which is June 20th, and focus on 23,400 June 20th Nifty call. Let's see what is it priced at, 172 rupees. What would be your view on this one, sir?
So I think Shailji, yes, now Nifty has cooled off and coming back to the 2,300, 23,400. That's the immediate support area for intraday perspective. As overall structure for the Nifty is on the bullish side, and we believe that yes, there could be some sideways consolidation as we have option expiry, weekly option expiry today for Nifty. So I think some consolidation is likely to occur as still Nifty not able to penetrate its major call concentration supply zone, which is placed at 23,450, 23,500 zone. But those who wants to buy this call option of 28 June of 23,400, they have to keep for next couple of days. There is a high possibility that we may see a rally towards 240 to 250 for this call option. So here one can buy and accumulate this call option with stop loss of 120. That's it's a deeper stop loss, but that stop loss one needs to keep because today again option expiry, so there could be some volatility in the market. So 120 should be your stop loss. On the higher side, 240 is the possible target in next couple of trading session for this option.
Okay, so this we'll keep this call right through the day, and remember we are showing you June 20th call moving into the next weekly expiry where you have 1 day short. Monday is a holiday, please remember that. Keeping that in mind, those options premium will be squeezed further because time value will now deteriorate over 4 days instead of 5. It will be very quicker, therefore you need to keep in mind those points. Okay, I think this is a bit of profit booking that's happening in the broader markets. I see the advance decline ratio deteriorating. Remember, we started at 1800 advances and 217 declines. For the moment, it's about 1545 advances and 638 declines. A bit of profit booking happening across the board. The Nifty, as I have mentioned, has taken support at 23,411. Let's see whether it bounces from then on or not. But Sakshi, taking it away is Sobha Developers. Let's get Amarji's view here. Sobha Limited announced a rights issue and is now at 2208. Needless to say, this is a record high. Amarji, this is at a record high which you've sort of, told our viewers and early investors to avoid. But nevertheless, what's the view on Sobha?
Just like I would say, M&M Sobha is also on a very strong upward trajectory, and it did consolidate for some time, anywhere between, I would say, 1,700 and 2,000 levels, and then it has breached that level, currently trading above 2,200 levels. And what we've seen is for the last, I would say, somewhere last 7 to 10 days, we've seen some increased volume also. One was on the results day, and the other significant volume was a few days later. So that tells me that there is still a lot of interest. And if you ask me, structure of the chart from a long-term perspective or even an intermediate-term perspective, that continues to be very strong and extremely bullish. And also, one good part is that a short-term technical indicator, which generally in such circumstances points towards overheating of the stock, that is not the case here. So effectively, it means that there could be more upside to the stock. But again, as I said, entry at the current levels wouldn't be a very good idea. Any correction is a buying opportunity. The stock now has got very strong support coming around the 1,900, 2,000 levels. Upside, the stock sustaining above the 2,200 mark is something that's going to be very important, because the stock had made a high of 2176 on 10. So sustaining over the 2,200 mark, the stock has a potential to rally towards 2,280, 2,300.
Okay. The rights issue for 2,000 crore rupees is priced at 1651 for Sobha. So that makes the rights even more attractive, because the current market price of Sobha keeps on going up. It opens between June 28th and July 4th. Keep that in mind as far as Sobha is concerned. And Sakshi, there's a digit change in Oracle Finance, now above 9,000 rupees. So IT is clicking very well, 460 points higher. On the IT index, you have 35,000. Remember, just 10 days ago, we were talking about how to buy ITBs. What are you watching?
So the entire IT and the realty space seems to be in focus. Apart from this, I also wanted to check the metals pack specifically. Rajesh ji, how are you looking at the metal story, especially now that the US Fed uncertainty is out of the way, no rate hike on that front, commodities are going to be in focus again, metals, precious metals, how are you really looking at this space?
I think most of the metal stocks have done well in last couple of months, and the way most of the metal stocks have rallied, we believe that after some brief consolidation, again we can see a continuation of this uptrend, and as most of the stocks manage to give breakout on their short to medium term structure. So I think some of the stocks where we are keeping our eye to buy and accumulate. First one is Vedanta. That stock is looking very promising. Though some consolidation is happening in the stock since last couple of days, we believe that till the stock is holding above 415 level, any minor dip should be used as a buying opportunity in the stock. We expect that once the stock crosses above 470, 480 kind of zone, then this rally can continue further towards 550, even 600 on the positional perspective. So the Vedanta is looking promising. Another stock that we are keeping eye, that is Tata Steel. This stock also managed to give breakout of its previous swing high, which was of August 2021. So almost 2 or 3 year breakout is already taken place in this stock. So again, on the long term chart, the stock is turned on the bullish side, and we believe that till Tata Steel is holding above 174 level, one should remain on the long side of trade. Possible rally in Tata Steel on a positional perspective can extend to 200 to 210 kind of level. So here also one can keep eye from the metal pack. And the third one is Jindal Steel and Power. This stock is also enjoying its all-time high trajectory, and now stock is comfortably holding about 1,000 mark. So the way stock is showing strength across all time frame, we expect that Jindal Steel and Power can also exhibit good amount of rally. Possible upside we can see on a positional perspective toward 1150. So here also one can buy an equivalent. Your stop loss should be placed at around 995.
Okay. Let's also check broader markets. A whole host of stocks, rallying sharply in trade. There is Om Infra that Shail you were looking at. It's again up about 9% in trade today. Yes. A sharp move coming in on that one. Astra Microwave, that's up by 10%. NCL Industries is up by 8%. Dilip Buildcon is in flavor today. You have 8% uptick coming in on that. Venus Remedies is up by 7.5%. PTC Industries is up at 13,000 levels now, 6.3% higher. We also have stocks like Premier Explosives. Remember, we've been checking on that one too, 6% higher for that one. Sakti Sugars is up from the sugar space. You also have Astra Microwave, Zenith Exports. These are the kind of stocks that are buzzing within the broader markets, sharp moves that are coming in. Anything, Amarji, from this basket of stocks that I read that ticked your attention as well?
So if I look at some of the stocks which you talked about, Venus Remedies is one stock one can definitely keep a close watch on, because what we are seeing here is that the stock has been consolidating for quite, I would say, many months. It has broken out of a zone of resistance, which was earlier around 350, 360 zone. And the stock has a potential to rally towards its recent highs of 400, 420 levels. So this is one stock one can keep a watch on. And if you look at the structure of the stock, that also is positive, and there is a buildup of momentum. And also what we are witnessing is that volumes have increased significantly over the last couple of days. So this is one stock one can keep a close watch on.
Okay. So that's the strong move that we are seeing across the board, even in broader markets. Consumer durables is now picking up. So stocks like Titan are coming back in flavor, 1.3% up in trade. Voltas, Whirlpool, these are the stocks that are ticking now. Apart from this, Dixon Technologies, Havells, Cera Sanitary Ware, these are the stocks that are coming back in flavor. Rajesh ji, anything that you'd like to check from this consumer durables basket too?
I think Dixon is looking very promising. The way stock is trading across all time frame, there is a strength, and now stock is comfortably holding about 10,000 marks. So we believe that Dixon can hold the ground on the higher side, and possible really can extend towards 11,000 mark also. So I think Dixon one can buy an equivalent. Your stop loss should be placed at around 10,000 mark. Again, if we analyze the Voltas structure, that stock is also looking promising. Some consolidation is taking place, but near-term, short-term structure has turned already bullish. The way stock is holding above 1430, 1440 mark, we believe that if these levels are intact, possible really can extend to 1540, 1550 kind of zone. So Voltas is also buy. One can buy and accumulate this stock also for near-term trading perspective.
Okay, ladies and gentlemen, we are at 9:42. About 27 minutes of trade has happened. Remember, the Nifty is now filling the gap that it opened with. Now 71 points higher, 23,393. Any dip towards 23,350 is then a point of entry. Remember, we are tracking the 23,400 Nifty. June 20th call for you. The last time we checked the price, it was 167. For the moment, it is at 153. Keep an eye out on this one. If 23,400 indeed breaks on a closing level, then this call will become operational. Also remember, today is the weekly expiry of the Nifty. Monday is a holiday. Options Premier will get squeezed quicker. But what's clicking, Sakshi, is the power sector. A change in digit as far as power finance is concerned. You have 502. Let's just take a look at how the open interest is stacked up as far as the PFC and REC are concerned. It becomes very, very difficult to watch these numbers immediately. This is at okay. IEX, let's look at IEX, 4.5% higher in open interest. Rajesh ji, coming to you, this is a high beta, low ticket sized item, doing pretty well over the last 2 or 3 trading sessions, and that's because of a very strong tailwind in the power sector. We'll discuss the tailwind later, but what is IEX telling you?
Definitely, Shalji, there is a strength on near term as well as on the short term chart. But again, if we analyze the long term structure also, so there is a high possibility that on the long term chart also after this recovery from recent low, now there is a base building activities happening on the long term chart. Then the way stock managed to give breakout over 170 mark, we believe that if it's a hold above 170, then there is a high possibility that stock may continue furthermore upside towards 210 to 220 kind of level on the short to medium term perspective. So I think those who have already bought stock at lower level, or if you want to buy at current level also, you can buy and accumulate the stock. Your stop loss should be placed at 170. Possible really in next couple of months we can see towards 200 to 210.
Okay, 2 more stocks, Sakshi, and this time from again the IT space that you are watching, Birla Soft and KPIT. We discussed these 2 stocks about last week. Birla Soft is something that is worth watching, and you just might see a breakout here as well. The prices are highest since 30th of April. Rajesh ji, your one-time favorites, Birla Soft and KPIT.
So definitely mid-cap IT, as we mentioned, is looking more promising compared to the large-cap IT. And Birla Soft is one of the stock after the corrective move. Now stock has recovered very well, and now stock is holding the ground above 200-day moving average. So that clearly shows that confidence is coming back in this stock, and then we believe that till stock is holding above 675 mark, this stock has potential to move back to the 700 plus kind of level in short period of time. So I think Birla Soft one can buy and hold at this moment. Your stop loss should be placed at 670. And KPIT, yeah, KPIT is also looking promising. Stock is in consolidation since last couple of weeks. Though on the long term structure, stock is bullish. In near-term structure, stock is consolidating in a price range of 1400 to 1600. But looking at the overall structure, we are optimistic on the stock, and once a stock manages to cross above 1540, 1550 zone, then here also we can see a good rally to turn out, and the 1650 could be the next target for the stock in the short term.
Okay, got that. Well, let's also look at a few more stocks within the mid caps that are moving up. Of course, it's the IT entire basket: Oracle, Coforge, Tata, Elxsi, KPIT, Tech. The entire space is moving. Some of them highlighted by both Shail and Rajesh ji. What got my attention is also the internet-based stocks. Paytm, another 5% higher in trade today, 4.7% higher at 422. Yes, it's a 5% uptick now, and remember the circuit filter is now back to 10%, so we are seeing it inch higher, 5.2% higher now on this one. Amarji, how are you looking at Paytm, and is the worst behind for this stock?
I would say that if you look at Paytm, what we are seeing is that it's more driven by news flows and all that. So if you look at Paytm, yeah, it seems to be that the worst is over, and the stock has a potential to now rally towards the 450, 475 levels. So that's a level where the stock could run into some stiff wall of resistance, but the stock seems to have formed a base. But one needs to remember that any stock which is being governed by news flows to a certain extent, you have to be slightly cautious on that, because any positive news flows has a positive impact, and any negative news flows, the stock witnesses some correction. So keeping that in mind, one can look at this stock on the upside. As I said, 450, 470 is the level to watch out for. The stock seems to have made a base around 370 odd levels.
Okay, so that's Paytm for you. Let's also look at some other stocks. Rajesh ji, within the financial services space that is now ticking higher, what are you really looking at? Let's now look at some of the stocks within these NBFCs. Cholamandalam Finance is moving up. Shriram Finance has been continuously surging from the time it got included into the Nifty index. There's been no let up in the kind of rally we are seeing here. We also have Bajaj Finance. Of course, things will start to move now when the IPO news will start coming in of its subsidiary. Muthoot Finance, the Bajaj Finserv also. The entire basket is also showing us some ticks on the higher side. Anything that looks promising?
So Sakshi, Chola Finance definitely one can buy as there is a long built-up setup in the stock, and the way stock managed to give breakout of its multiple supply zone, and almost stock is trading at all-time high trajectory. Here we can see continuation of rally, and possible target for Chola Finance could be towards 1450 to 1460. Here one can buy with stop loss of 1370. Another stock from the same sector which we like at this juncture is AB Capital. That stock is also looking promising. The way really we have seen in last couple of weeks, and now stock after a brief consolidation again showing a good traction. We expect that AB Capital, if it's able to take out about 240 zone, and really can extend to 255 also. So here also one can look to buy with stop loss of 232.
Okay, ladies and gentlemen, we'll pay attention to the volume breakers. It's actually surprise. When was the last time we saw HDFC Life futures being the top traded as far as price and volume action is concerned? Well, it's happened. About 8,710 lots have been traded on HDFC Life. The counters also in the green, 2.4% higher. Remember, this is one of those very disappointing shares in the long term that have created next to no value for long-term shareholders. Rajesh ji, first coming to you, what are the charts of HDFC Life saying? And then we'll get Amar ji to comment on the fundamentals of HDFC Life.
So Shalji, there was an underperformance in HDFC Life, but the way the weekly chart is now shaping up, stock managed to give breakout of its falling trend line. So there is a high possibility of trend reversal sort of pattern is taking place, and as the price action is suggesting that now stock is holding above 575. If it continues to hold above this level, some follow-up buying action we can see, and then stock can move towards 620. That's the major supply zone for the stock on the near-term structure. So 620 could be the next target for the stock on the high side. Again, one should review around those level, because if it's able to take out 620, then really can extend further. But time being, for trading perspective, 575 should be your stop loss to buy a stock for upside target of 600 to 620.
Okay, and Sakshi, why do I say that domestic shareholders have been shortchanged by HDFC Life? The all-time high was in July of 2021. This was the peak of COVID, 777. The counters now at 570, when an actual reversal in the broader market has happened. From those levels, the Nifty is up 2 times. HDFC Life is down. There are some changes that have happened in IRDA, the governing regulator of the sector, which benefits HDFC Life and Max Life. Therefore, you see the gains that have coming in. But like I said, for long-term shareholders, this has been a major disappointment when the broader markets are in a trending bull market. Coming to you, Amarji, your view on HDFC Life.
We have to understand that insurance is a sector which definitely is witnessing growth, but you cannot expect very significant growth happening from a short-term perspective. So it's more like the FMCG sector, wherein you continue seeing growth, and growth will continue in this sector. There's no doubt about it. Having said that, these are companies where one can look at investing from a long-term perspective, maybe 3 to 5 year cycle, LIC, HDFC, Life. But you'll have to have patience. At the same time, it behoves and also makes sense to have a portfolio wherein you have stocks which are to a certain extent defensive in nature. They are slow and steady. Some you can have high beta stocks as well. So that balances out. Having said that, if you look at the HDFC Life stock currently, the PE is significantly higher, around 75-80 levels. If you look at the sales growth for the company in the last 3 years, that's around 12%. Profit growth has been around 15%. So it's more of steady. You can't expect 25-30% growth unless something significant change happens. And also the mindset of the population, that also towards insurance, life insurance, that also is something which is undergoing a significant change, but we have a long way to go. So I would say these are sectors which have potential, which have growth, companies which have growth potential, but one needs to have patience.
Okay, got that. So that's the view coming in. Let's again look at what else is ticking into the markets. Realty, IT, financial services, mid-caps, consumer durables. We've discussed all these spaces. Within the PSU pack, again, it's the power financiers that are inching higher. 1.7% up for Power Finance Corporation. It's now at 500 levels. REC is up at 521. You also have HAL and BEL, but slight profits are being taken off. I'll tell you, it's FMCG, oil and gas, and now pharma, which is seeing some profit being taken off at the higher level as well. Let's look at the top contributors on either side as far as the Nifty is concerned. So when we look at the key stocks within the Nifty on the higher side, we'll be able to figure out it's the IT pack that is definitely contributing to the gains today. So stocks like Infosys, TCS, L&T, Kotak Mahindra Bank, HDFC Bank, Bajaj Finance, these are the top contributors. But on the flip side, it's HUL, Tata Consumer Products, Britannia, ONGC, Cipla. These are the top tracks as far as the Nifty is concerned. Let's also look at the small cap basket, because the small caps are now slipping away from the higher levels, and it's just about a 0.2% gain that we are seeing. Again, it's the sugar pack. Let's discuss the railway space. We haven't discussed that one today. Titagarh Rail Systems is hovering about 1% higher in trade. Rajesh ji, we've been looking at the entire momentum build up over the last 5-10 days or again on the railway pack. So stocks like RBNL, Railtel, Titagarh Rail, JWL, they've all been in thick of action because of the kind of flows and orders that they've been getting. Where are you finding still confidence and entry points that can still have fresh money being poured into?
Definitely. So here in the railway stocks, continuity of uptrend is there, and there is no dent in terms of trend which we are seeing in the near term as well as on the short term, despite of volatility in the market in last few weeks. But looking at the longer term structure for most of the railway stocks, we do expect that here we can see furthermore extension of rally. For Titagarh Wagon, yes, one can buy and accumulate the stock. Possible target 1600, 1650 on the higher side, but it's not for trading. One can buy as a positional perspective. Your stop loss should be at around 1370. RVNL, again, we are holding our bullish view, and we expect this rally can extend to 440, 450 kind of zone. Again, IRFC is also looking promising from that space. The way stock is holding above 165 mark, I think if it's hold above 165, here also we can see a rally in coming weeks, and possible target we could see towards 220 to 230. So whole railway stocks are still in the bullish zone, and buy on dip should be a strategy. We believe that this sector can continue for the more upside, and another 10 to 15% kind of rally we can see in a couple of months.
Well, okay, we are looking at profits being taken off the table from the high point again in trade. So the Nifty is hovering around 23,390 odd levels. But definitely some of the profits are being shaved off. Realty, IT and financial services, they continue to remain in fine fettle, but it's the FMCG space, pharma and oil and gas that slipped into the red as of now. Top movers on the Nifty: Divis Laboratories, HDFC Life, LTI Mindtree, Shriram Finance, Wipro, Kotak Mahindra Bank. And on the other side, when we look at the drags, we'll find it's Tata Consumer Products, HUL Britannia, Eicher Motors, Cipla, ONGC. These are the top drags as far as the Nifty is concerned. We'll wrap it up at that. Many thanks, Rajesh ji, for being with us and sharing all those wonderful stock ideas and how to navigate these extreme volatile times in the markets too for all our viewers. With that, viewers, we'll wrap it up at that. Thank you so much for being with us on the morning edition from both Shell and B. But we'll continue to track how the markets really pan out through the course of the day. There are earnings conversations that will follow. Daily calls will come in at 12. If you have any questions on your stocks, do send in to us, and at 12 we will be taking those questions live, so join in on that. We will also have a special show at 12:30 with Gurmeet Chadda today, as he will be suggesting to us how do you really invest your fresh money in Modi 3.0 scenario. So we'll be constructing a portfolio, so join us for that as well. And of course, Shell and I will be back on the closing trades on market today. So an action-packed day for you. Stay tuned on Business Today.
TVS Supply Chain Solutions. 29 lakh shares have been traded. Mitesh ji, coming to you. This is a counter which is still around its IPO price, if not below. 182 rupees. What are the charts telling you? I know there is less of data, but let's just make an